Hello everyone, welcome to our webinar for upcoming new fund offer. My name is Jiyoung, Senior Manager of Mirae Asset ETF team, and I will host today's webinar. So we are very happy and excited to introduce our two new passive products, ETF and fund of fund. The name of ETF is Mirae Asset Nifty Smallcap 250 Momentum Quality 100 ETF. It's a little long, and fund of fund is underlying the same ETF. So NFO for ETF starts from today and it will be closed by next Wednesday, 21st of February. And NFO for Fund of Fund will start from 15th of February and it will go on till 28th of February. So as you can assume from the product name, Mirae Asset Nifty Smallcap 250 Momentum Quality 100 ETF is the ETF consists with 100 stocks which have high momentum and high quality score. So how can ETF, filter and rank high momentum and quality stocks? So to explain this further about the product, we have Mr. Siddharth Srivastava, the head of ETF product team. He will take today's session and explain about the product. So if you have any question during the session, please feel free to share your question on the live chat as Q&A session will be followed after the session. So let's not take further delay. Siddharth, it's over to you.
Thank you so much, Jiong, for introducing this webinar and for starting this webinar. So, hello everyone. Thank you for joining us on a Monday afternoon for this webinar. And as Jiong mentioned, we are coming out with two products. One is an ETF, and second one is a fund of fund which will invest in that concerned ETF. And the objective of both the funds is to track Nifty Smallcap 250 Momentum Quality 100 Index. It's just two ways in which you can take exposure. If you have Demat account and if you are comfortable on buying and selling ETFs on exchange, you can choose ETF. Whereas if you do not have a Demat account, or if you prefer a mutual fund way of investment, or wants to do SIP, STP, etc., you can choose the fund of fund. And as Yong mentioned, the ETF NFO starts today. It will close on 21st Feb, and the fund of fund will start on 15th of Feb and will close on 28th of Feb. So we are very excited about this offering because this is a first of its kind multi-factor product in small cap space. To put it simply, it's a first of its kind passive product जहाँ पे two factors, quality and momentum, are being used to select stock in to become part of the index. And I'll talk about how this momentum, quality, etc., helps in creation of a very robust portfolio which has performed well in different market cycles. So please stay tuned. So very quickly, I think we all know what is small cap segment. So in this initial slide, I'll just rush through the information. As we all know, the small cap is basically 251 first ranked stock till the 500 ranked stock as per the National Stock Exchange. So top 100 is large cap, 101 to 250 is mid cap, and 251 to 500 is your small cap. And small cap range, typically from a market cap point of view, is from 7.5 thousand crores to almost 22,000 crores. So in terms of actual market cap, the small cap segment has grown significantly. And reason for small cap investing, obviously, we want to participate in the growth journey of small cap wealth creation. We want to participate in different themes. There are a lot of themes and segments which are not adequately well represented in large and mid cap space, but in small cap, they have reasonable representation. And obviously, to if we are able to identify such early growth stage companies, possibly the wealth creation will be on the higher side. So that is why people invest in small cap, right? And if I put it in a more let's say summarized manner, uh, investors and obviously uh, the fund creators, fund managers wants to identify wealth magnifiers, वो कंपनियां जो which have higher than average earnings growth, which are expected or have generated significant returns. They want to identify and invest in wealth preservers, companies जो कि ज़्यादा robust रहती हैं, which are more stable, and want to avoid companies which are wealth destroyers. So in small cap category, you'll have companies which are, let's say, earnings utni stable nahi hai. There's a lot of leverage. There is a business risk. Fundamentally, company is not sound, and you typically want to avoid such companies. So you want to identify companies जो wealth मैग्नीफाई कर रही हैं, जिनकी परफॉर्मेंस अच्छी है, अर्निंग्स ग्रोथ काफी अच्छी है. यू वांट टू इन्वेस्ट इन वेल्थ प्रिजर्वर्स, but you want to avoid wealth destroyers, right? And small cap as a segment as a whole has grown significantly. For example, in last 10 years, average full market cap of Nifty Smallcap 250 index has grown by 5.6 times. एंड इसके साथ साथ लिक्विडिटी भी इम्प्रूव हुई है स्मॉल कैप की, ऑब्वियसली नॉट एज हाई एज मिड कैप्स एंड लार्ज कैप्स, बट या लिक्विडिटी हैज आल्सो इम्प्रूव्ड. बट जैसे मैंने पहले बोला कि यू आर प्राइमरली इन्वेस्टिंग इन स्मॉल कैप टू आइडेंटिफाई योर वेल्थ क्रिएटर्स, वेल्थ प्रिजर्वर्स एंड अवॉइड वेल्थ डिस्ट्रॉयर्स. रीजन बीइंग कि स्मॉल कैप में these multi-baggers, companies which have given 200, 300% returns are more. And an objective is to hopefully identify such companies and invest in a portfolio जिसमें ऐसी companies ज़्यादा present हो. If you look at last 3 years, you have almost 54 small cap companies which have given return or grown by 3x to 5x. And that's why there's like intent of investing in small cap category. Now, while the small cap has grown, it is also backed by reasonable growth in earnings also. Unlike in 2017, जहां पे small cap की पिछली peak आई थी and earnings were not that strong, this time around, we are seeing that earnings also in small cap segment is pretty strong. So for example, from 17 to 23, earnings in small cap 250 segment has grown by almost 17%, whereas mid cap segment has grown up by 14.7% and large cap only around 12%. So yes, small caps have given exuberant returns, but unlike 2017, a lot of these returns are backed by good earning numbers which are coming out of this segment. So all this exuberance or all this rally is not without any base. And lastly, small cap provides diversification. You have, for example, capital goods segment, reality, etc., which are present in small cap and not so well represented in large cap segment. And if you are keen to invest in these segment, small cap is the way to do it. Now let's talk about why we shortlisted this index to launch our product in small cap. Right? Because Mirae right now do not have an active scheme on the small cap side. So when we started thinking कि क्या करना चाहिए small cap segment में, how can we create a robust product, we started thinking of what does investor want or is concerned about when he or she is investing in small cap. I think answer is pretty straightforward. First want is that he or she should generate returns, right? Because that is why you are coming to small cap segment. Otherwise, you will invest in a large cap or a mid cap, or if you are more risk averse, you'll rather invest in a debt product, etc. So first, you want returns. Second, you want a quality portfolio that returns तो आ रहे हैं, but if it is coming out of a quality portfolio जहाँ पे your companies are much more stable, much more robust, you are sorts of now assured कि तुम्हारे portfolio का drawdown or rather fall इतना stark नहीं होगा. So you are looking at first returns and then looking at quality, because now you want to avoid risk as much as you can. And third is liquidity. You want basically at the time of deployment and at the time of redemption, you don't face liquidity issues in small cap segment. So momentum, quality, and liquidity are three primary things which people think about when he or she is investing in small caps. And which is why we reached out to NSC and had them create this new index which addresses all these concerns. So NSE has come out with this new index which caters to the concern around liquidity, which tries to pick stocks based on momentum as well as quality parameters. And through this single index, you are able to tackle and answer questions pertaining to liquidity, quality, and momentum. So how does this index go about doing it? So the entire selection process starts from small cap 250 universe, right? Because as I said, that 250 on to 500 is what is small cap as per NSV. So the first filter is liquidity. And how do the index go about it? It removes all the stock where listing history is less than 1 year. All these stocks where upper circuit or lower circuit is being hit very frequently, right? Because that's a concern. Why so much volatility? Is it explainable, unexplainable? Is it driven by some XYZ thing or what, right? So any stock which has very frequent circuits, which is hitting very frequent circuits, are excluded. Stocks where more than 20% pledging is done by promoter is also excluded. Then stocks where daily average daily trading value is bottom 10 percentile is also excluded. And stocks where turnover ratio, which means key relative to their market cap, how liquid the stock is in bottom 10 percentile is also excluded. So the first thing which NSE is addressing is liquidity in this index. All these stocks with lower listing history, lot of circuits, high promoter pledging, low volume, low turnover ratio, etc. are being removed. Now, when such set of companies are removed from because of liquidity analysis, the remaining companies, let's say out of 200 or 250, 40 companies are removed because of liquidity issues. Now, out of those all 210 companies are then assessed on quality parameters as well as momentum parameters, both. So for all the 200 companies, इन कंपनियों को basically will analyze it on profitability, financial health, and earnings quality. वो कितनी profitable है, from a financial health point of view कितनी stable है, and इनकी earnings quality पिछले 5 साल में कितनी अच्छी रही है. इन तीनों की चीज के बेसिस पे सारी कंपनियों का क्वालिटी स्कोर निकाला जाता है. एंड देन साथ ही साथ कॉन्करेंटली इन सारी कंपनियों का शॉर्ट टर्म मोमेंटम एंड लॉन्ग टर्म मोमेंटम, विच इज in past 6 months, what is the risk adjusted return, and in past 12 months, what is the risk adjusted return निकाला जाता है. And finally, top 100 companies जिनका क्वालिटी भी स्कोर भी हाई है एंड मोमेंटम स्कोर भी हाई है, उनको चूज किया जाता है एवरेज स्कोरिंग के बेसिस पे. सो जस्ट टू क्विकली समराइज, ऑल 250 कंपनीज पहले लिक्विडिटी के बेसिस पे फिल्टर आउट होती है, जो मैंने बताया. लेट्स से 40 कंपनियां, 40 कंपनीज आर एक्सक्लूडेड बेस्ड ऑन लिक्विडिटी. ऑल 210 कंपनीज आर असेस्ड बेस्ड ऑन quality parameters and momentum parameters, right? And top 100 companies, which are good in quality and momentum both, are selected to become part of the portfolio. So you are getting a portfolio where liquidity is at rest and selection is based on quality and momentum parameters. And finally, just to ensure that everything as per what is being intended, the weights of the stock is also being influenced by its quality and momentum score. So let's say there are two companies, A and B, and let's say both have similar market cap. If A has better quality and momentum score, it will get a higher weightage compared to a B. Now, यहाँ पे तो मैंने बात करी कि how quality and momentum factors are being used, etc. But in factors का फायदा क्या होता है, right? And again, answer is very intuitive. Now, if I ask people that liquidity factors help कि आपका deployment and redemption पे ज़्यादा issues ना create हो, right? But जब आप quality की बात करते हैं, what do you imagine? A quality portfolio will typically fall less in times of economic turmoils, in times of market turmoil. It will be more robust, whereas momentum portfolio or momentum factor will rise more as in a broad market rally. So is it actually happening? क्या ये index, after picking stocks based on momentum and quality, is able to exhibit those characteristics in different market? And I think the answer based on data which NSE has come out with in a way says yes, in which more often than not. So for example, since 2005, this index, which is based on quality and momentum, has outperformed the benchmark handsomely. And here I think momentum factor comes into play, because the portfolio consists of stocks which have good momentum and good quality. That momentum factor is picking up and ensuring that the portfolio gives adequate returns. Quality, जैसा आप इस चार्ट में देख सकते हैं, helps in reducing the drawdown. If you look, the lighter shade of orange is the new index, and the darker blue is the small cap broader index, which is the 250 index. And you can see consistently this portfolio has lower drawdown, which means lower fall than the small cap index, which is because the stocks are being also picked on quality parameters. So it is more robust, more stable, especially when markets are correcting significantly. And this just highlights, again, based on quality and momentum parameters, the index is able to pick stocks which are doing well in multi-bagger zone, and it is able to avoid stocks which are eroding wealth, which are sorts of underperforming the market. So just to quickly summarize, quality is helping reduce the drawdowns or fall of the portfolio, and momentum is helping in portfolio capturing the broad market rally. Now let's look if this is being also reflected in the returns. Now, if we look at last 15-year, 10-year, 7-year, 5-year, 3-year, etc. horizon, you can see that this new index, the Momentum Quality 100 index, is outperforming small cap across all long horizons, and in any horizon more than or equal to 1 year. And in fact, in longer horizons like 10-year, it is outperforming by almost 5.2% on a CAGR basis. Same in 7-year and same in almost 3%, almost 2.5%, 3% in 5-year horizon. It is also reasonably well outperforming the Nifty 50 index also. But I think CAGR is always sorts of recency bias. So let's look at calendar year returns and rolling returns. Now, if you're looking at calendar year returns, I think यहाँ पे इस पोर्टफोलियो का बिहेवियर ज्यादा सामने आता है. फॉर एग्जाम्पल it has outperformed the market in 16 out of 18 calendar years, which is a fairly good hit rate. The only years it has underperformed is 2007 and 2022. 2022, especially because in 2022 rally, it was more of a value driven rally and quality stocks sorts of underperformed the market. But apart from that, just look how well it is able to capture the bull run of the market and how well it is able to protect when market is in a bear phase. For example, in 2023, 1% outperformance. In 2021, almost 9% outperformance. In 2020, almost 3% outperformance. In 2017, almost 14% outperformance. In 2014, almost 10% outperformance. In 2012, almost 7% outperformance. Same in 10, almost 10% outperformance, and 2009, almost, I think, 15% outperformance. So you can see in this rallies, when market is rallying, the product is outperforming. But also, and I think more importantly, what is happening when the market is underperforming, right? Is quality helping you? And I think the answer is yes, based on historical data. In 19, when small cap segment fell by 7.3%, this portfolio was down only by 1.9%. In 18, when small cap segment fell by 26%, this portfolio was only down by 18.4%. In 2013, when the small cap segment fell by 6.4%, this was up by 11.8%. So a portfolio, because it is being created using momentum and quality, is showing robustness during market correction times and is able to capture a bull rally because of the momentum factor. And I think that is the most key point of this product which we are coming out with. And that is why I think we are, from within a small cap space, we are very keen on this particular offering, even from a rolling return point of view. So the first table on the top talks about what is the returns which is generated if your investment horizon is 1 year or 3 year or 5 year or 7 year, etc. This tells you the average returns which an investor could have generated for a 5 year rolling return, right? And let's talk about 5 year. This index gives you a return of 19.9%, a 5 year rolling average for the entire history, compared to a broader uh, Nifty small cap 250, which generates 11.7%. So almost 8.2% outperformance on a CAGR basis. It even outperforms the active small cap funds. I think that is very important. It outperforms it by almost 2.3%, the regular plan. So if you look at from a rolling return point of view, 1 year, 5 year, 7 year, 10 year, it does better than active small cap funds on an average. Yes, it underperforms in 3 years, but 1, 5, 7, 10 year does better. Even when we are looking on a point to point basis, you can see in last 1 year, almost 80% of small cap funds, be it be regular plan or direct plan, have underperformed this particular index. In 7 year, almost 84% of regular plans have underperformed by an average of 3.1%. In 10 year, again, almost 81% of small cap funds have underperformed. In 3 year and 5 year period, again, 68% and 58% of funds have underperformed this index. So this just highlight that we all talk about passive in large cap segment, but even in a mid cap and a small cap segment, passive is a very powerful tool if you want to take a, a, a focused exposure with a known methodology and want to avoid fund manager risk. You're surprised to know that even in mid-cap segment, a lot of active mid-cap funds are underperforming the broader mid-cap 150 index. Here also, we are creating a portfolio which is using very well-known factors like quality and momentum. And with that strategy, we have seen historically in different market cycles, the fund is actually outperforming majority of active small cap funds. So this is a very powerful portfolio and an offering if you want to take exposure in small cap segment. Now, this is again something which talks about that at how many instances more than 20% rolling returns have been generated for different investment horizon. I won't go much into that, but here you can see the sectoral diversification, which just points out that since we are using momentum and quality both, you are getting a well diversified portfolio across sectors. As Jiong mentioned, this is a 100 stock portfolio where top stock is capped at 3%. So you do not have a very high exposure to any single stock, which can create issues. So it's a diversified portfolio with a top stock having 3% weight assigned during the time of rebalancing, sectorally well agnostic, stocks being picked on quality, momentum, and liquidity parameters, provides robust and stable performance during market correction, and tries to capture the bull market whenever there is a broad market rally. Now, I think we have talked about the fund, how the selection works, and how the performance is. But also now the most important question is what about small cap valuations? Aren't they trading at premium? I think the short answer is yes. If I look at data right now, it is roughly around 18 to 19% premium they are trading at relative to their last 5-year average valuation. So, so yes, small caps are trading at premium, as I mentioned, around 18 to 19% compared to their last 5-year average. But one thing which I mentioned at the start, and that you can see in light blue line also, that this time around small caps are also being backed by a reasonable uptick in the earnings also, which was not the case in 2017 and henceforth for next 1-2 years. This time around, we are seeing a good earnings also. So yes, small caps are at premium, but they are being backed by reasonable earnings. So what should you do? I think yes, I think that's the final question, right? So I think so there will be two set of investors, right? One who believe that this rally will continue because of the strong earnings at small cap category level, and because of the fact that market is obviously exhibiting the positive sentiments around the Indian economy, etc. This rally will sustain. Now, those sort of can explore investing in a lump sum manner. So I think the only difference will that they have to now invest for a longer horizon. I think if you are investing from a 5-year to 7-year point of view, even a lump sum investment at these levels might be okay. Because what we have done is, in this slide, we have done an analysis. Is if you would have invested from a peak to peak. See, that is very important, that from a peak to peak, if you're expecting small caps to generate similar returns, what they have done recently, next 1-year period or next 2-year period, I think that possibly is not going to happen, right? So your investment horizon should increase. And if that increase, right, if you're investing from this market to next market peak, which may be, let's say, 5-year or 7-year or something like that, you may still generate returns via lump sum, and you will possibly generate returns which may be better than lump sum through SIP route also. For example, here in this slide, if we look at these data, this talk about from peak to peak investment. What if someone would have invested in January 2007 till 2017, which is a 10-year horizon? He would have generated 22% in SIP and 16% in lump sum. which is comparatively in Nifty 50, 10 and 8% respectively. From a 14 to 23, SIP would have generated a 24% return and lump sum would have generated a 21% return compared to 15 and 13% respectively. So the point is, yes, be cognizant about valuations. Small caps are possibly not going to generate euphoric returns which they have generated in earlier past. But if you're investing either in a lump sum manner or in an SIP manner, you should definitely look at a longer horizon, possibly from this peak to another. If you believe that this is the peak, if you don't believe, you think that market is going to run up more, then that's obviously a call which you can take and invest in lump sum or in SIP manner. Again, this table just simply highlights that here what we have done is in the first table, had you invested in December 2017, which was a previous peak, and invested till now, what sort of SIP or lump sum returns you would have generated? Just look at 3 year. You would have generated negative returns in lump sum. But then look at a 5 year or till December, which is what we are referring to. You have to have a longer investment horizon. If you would have invested from 17 till December 2023, which is 6 year, your lump sum would have generated a fair returns almost 16.7% higher than Nifty 50. And even your SIP would have generated a reasonable return of 27.8%. Same can be seen for an investment period from December 2014 to December 2023. We're just talking from a peak to peak point of view. I think this two slides just simply highlights that at these levels, you should elongate your investment horizons and look at a longer duration of investment rather than looking at just 1, 2, 3 year. And then you can choose SIP or lump sum depending on your view of the market. So yes, I think that's it from me. As I mentioned earlier, we are coming out with both ETF as well as fund of fund, and ETF NFO starts today, will close on 21st Feb, and the fund of fund NFO will start on 15th Feb and close on 28th of Feb. So if you have any question, please type your question in the chat box, and we'll be happy to take as many of them as possible. That's it from me. Over to you, Gio.
Thank you, Siddharth, for your explanation. I think all Mirae assets are very excited with this new fund, new ETF and fund of fund. So we actually received several questions from our investors. So I think you can answer around 5 questions in this webinar. So our first question is, compared to large cap and mid cap, what are the advantages using smart beta strategy in small cap segment?
So I think when we started thinking of doing something on the small cap side, we thought, how can we have a portfolio which is very robust and which is liquid enough? And creating a small cap portfolio using single factor would have created some sort of sector biasness. कुछ ही sector के stocks ज़्यादा select होते, and plus would have made it more cyclical. Fund would have outperformed several times and underperformed also several times. So that's why we chose two factors, which is quality and momentum. The reason being that people associate small cap investing and talk about small cap investing, and they talk about momentum for returns and quality to avoid risk. And that's why we have chosen these two factors. NSE has chosen these two factors to be the selecting factor and factor on which the stocks will be selected to become part of the portfolio. It just helps in creating a robust portfolio, which, as I mentioned, can work in different market cycles.
Right. I think those like two pillars help this product to build diversified and long-lasting portfolio overall and like market situation. So let's move to next question. So you were actually, before you highlight momentum and quality, you actually highlighted about liquidity. And most of concern on small cap is lack of liquidity. So can you please explain our investors how are liquidity concern addressed in small cap portfolio?
Yeah, so I think the best which can be done is to avoid stocks which are illiquid
Mm-hmm.
and avoid stocks where there is very thin volume, right? And avoid stocks on parameters which sorts of give you an indication that there might be something wrong in the company, right? And all these are indicative. So as I mentioned that the index is excluding stocks which have lower listing history. They are excluding stocks which are hitting too many circuits and trading is getting halted. Also sorts of excluding stocks where there is too much of promoter pledging, and then excluding stocks where trading volume is low, and also excluding stocks where trading volume is low relative to its size also. So I think all these five factors are being used to ensure that whatever stocks which are coming into the portfolio are not having significant liquidity issues, and money which is coming in from the investors can be deployed with lower impact cost, and in the redemption also can be redeemed with lower impact cost.
Right, right. So like because small caps is like comparatively has lower size than large and mid cap. So this liquidity can actually uh like cost more when we trade, like trading cost, and also can be a large risk. So liquidity is the most important part like
Correct.
to yeah choose a small cap in this area. So let's move to quality parts. Like I want to ask questions on three different pillars, like about three different pillar you were highlight in the session. So you also explained in the session, but can you please repeat it? Like what is this stock selection criteria for checking quality factors in Nifty Small Cap 250 Momentum Quality 100 Index?
I think the name is long, right?
Yeah.
Yeah. So basically, I'll just repeat it for everyone's convenience. I think it's very straightforward, right? First of all, index exclude illiquid stocks from the 250 universe. So 250 is the small cap universe, like I mentioned a couple of times. From that, all the illiquid stocks are removed, right? Let's say they are 50 stocks, for example, which are illiquid. There's a high promoter pledging, they are hitting circuits, low listing history, trading values low, etc. Remaining 250 stocks are then assessed on both quality and momentum, because we want to create a portfolio which is of stocks which is good on quality and good on momentum. So for assessing the quality, अगर आपको कोई भी कंपनी असेस करनी होती है क्वालिटी में, यू बेसिकली लुक एट प्रॉफिटेबिलिटी, how much profitable the company is. That is being looked by looking at return on equity. You also look at how financially stable a company is, right? Apart from profitability. So hence you look at leverage ratio, which is debt to equity ratio. And then you also look how much stable the company is. So we look at last 6 years EPS, right? Earning per share. So for quality, we are looking at profitability, financial health, and stability. So all 200 companies which are remaining after removing illiquid stocks are assessed on these three parameters. And on the basis of these three parameters, quality score is arrived at. And then we look at momentum. To look at momentum, all these 200 companies, for them, 6-month and 12-month risk adjusted returns are computed. And based on risk adjusted returns for 6-month and 12-month, momentum score is derived. So we have quality score and momentum score. And based on the average score, top 100 stocks are selected to become part of the portfolio. And further to avoid stock concentration or any biasness, the top stock is capped at 3%. So that is how the selection process is working. And this way, we are catering to the concerns on liquidity first, and then picking stocks based on quality and momentum.
Okay. Yeah, that's actually yeah, helpful. I think that would be helpful for all investors who are listening. So I think we will have, I think, last two questions. It's just one second. Yeah. So, like in last part of the like presentation, you were highlighting about lump sum investment, SIP, and investment horizon and everything. So, in generally, small caps are like known for timing investment. But for this product, what is the ideal time horizon for investing in small caps?
I think 5 to 7 year is at
Mm-hmm.
least what you should look at
Mm-hmm.
from an horizon point of view. Because see, as I mentioned, that there's no doubt market and especially small cap is at premium, right? But also what we have seen historically that if you are invested for a long term from one peak to another, you can still generate good returns. And that peak, typically a market cycle may happen in a 5 year, 7 year horizon. So I think that is what investors should be looking at in small cap right now, that lot of returns have happened. Possibly similar sort of returns may not get generated in next 1 year. Answer is, do I stop investing? The answer is no. You just have to, in a way, increase your investment horizon and have that expectation that in next 5 to 7 years, when you have another bull run, your all these investments, either through SIP routes or through lump sum route, will possibly able to generate good returns for this longer horizon.
Mm. Yes, yes. I also 100% agree with you. As a foreigner, I've been seeing, I think mid and small cap, especially small cap, is the best reflection of showing growth story of India. So with 5 to 7 years of investment horizon, I think, I mean, you will see all these, like you can actually participate, great growth story of India for sure. The last question, like I will just ask the last question. So can you please, before we close the session, can you please explain about minimum investment amount and also the unit price?
Yeah, so minimum investment for during the NFO is 5,000 rupees or greater, and the unit price for fund of fund, the face value will be 10 rupees, and
Right.
for ETF, the unit price will be dependent on the index value on the closing date, on the
Mm-hmm.
allotment date for the ETF. So it will depend at what level the. So for example, if the index is at hypothetically 19,000, so that will be on which the allotment price for the ETF will be calculated. But having said that, it doesn't matter whether the unit price is for ETF is 70 rupees or 23 rupees. Ultimately, you are investing a quantum. So let's say if a fund generates 10% on 17 rupees or a 10% on 23 rupees, ultimately you're getting a 10% return. So for FOF, per unit price will be on the allotment day will be 10 rupees. For ETF, it will depend on the index level, and whatever the index level is, allotment will happen around at that some multiple of it.
Sure. Sorry, I think I missed one question just before I close it. This is important. I think this is important. Can you please explain about rebalancing frequency?
Yes, I think, and that's a good question. I think we forgot to
Yeah.
cover it in the webinar. This portfolio will be rebalanced 2 times in a year in the month of June and December. And at that point in time, all your filters will be applied again. All the companies will be checked on liquidity, again on quality, again on momentum, and whichever are poor now on these parameters will be removed. Companies which are better will be included. And again, the capping of 3% will be applied. applied again. So this entire refresh of the portfolio will happen on a 6 monthly basis in June and December.
Sure, great. So these are all the questions we have for today. Thank you so much, Siddharth, for today's session and all the Q&A session. I would like to thank you all for joining today. We hope that you found today's webinar helpful. So before we close today's session, I just want to summarize today's webinar in three bullet points. So Mirae Assets, Small Cap 250 Momentum Quality 100 ETF. Use three pillars to pick 100 stocks: liquidity, momentum, and quality. And combination of liquidity, momentum, and quality factors help product to build diversified and comparatively low volatile portfolio. And historically, if you see the performance of index, the index shown quite handsome performance compared to small cap index or other active small cap funds. So with long-term investment, like around 5 to 7 years, as Siddharth said, or SIP in longer horizon, investor can expect alpha generation. So thank you so much, everyone. Please note that new fund offer for ETF will go on till next Wednesday, 21st of February. And Fund of Fund NFO will open from 15th of February to February 28, 2024. So if you want to know more about Mirae Asset Nifty Smallcap 250 Momentum Quality ETF and FOF, or other passive product of Mirae Asset, please visit our website for more details. And also don't forget to visit our YouTube channel for educational videos about passive investing. Thank you, and thank you everyone, and wish you the very best in your future investment journey ahead with Mirae Asset. Thank you.